Most people watch Bitcoin's price. Smart money watches the dollar. There is one indicator that has predicted every major Bitcoin move, up and down, better than any crypto chart. It's called the DXY, and if you don't understand it, you're trading blind. Today I'm going to show you exactly what the dollar index is, why it controls Bitcoin, and what it's telling us right now. Let's get into it. The DXY, or dollar index, measures the strength of the US dollar against a basket of 6 major world currencies: the euro, Japanese yen, British pound, Canadian dollar, Swedish krona, and Swiss franc. Think of it as a scoreboard for the dollar. When DXY goes up, the dollar is getting stronger. When DXY goes down, the dollar is weakening. Simple as that. But here's what most retail investors miss. The dollar isn't just America's currency, it's the world's reserve currency. Every major commodity, oil, gold, and yes, Bitcoin, is priced in dollars. So when the dollar moves, everything else reacts. Here's the core relationship you need to understand. DXY up, Bitcoin down. DXY down, Bitcoin up. They move in opposite directions, almost always. Why? Think about it this way. Imagine you're an investor in Europe. You want to buy Bitcoin. Bitcoin is priced in US dollars. If the dollar is strong, it costs you more of your euros to buy the same Bitcoin. So demand drops, price falls. Now flip it. Dollar weakens. Your euros buy more dollars. Bitcoin becomes cheaper in your currency. Demand rises, price goes up. This happens globally, across every currency, simultaneously. Billions of dollars of buying and selling pressure, all driven by one number, the DXY. Let's look at the data, 2020 to 2021. The Fed slashed interest rates to zero and printed trillions of dollars. The DXY dropped from 103 to 89. Bitcoin went from $8,500 to $69,000. Dollar weak. Bitcoin explosive. Then, 2022, the Fed started hiking rates aggressively to fight inflation. The DXY surged from 95 all the way to 114, its highest level in 20 years. Bitcoin crashed from $69,000 to $16,000. Dollar strong. Bitcoin crushed. Then late 2022 into 2023, the Fed signaled it was slowing rate hikes. DXY started falling from 114 back toward 100. Bitcoin recovered from $16,000 back above $30,000. Dollar weakening again. Bitcoin recovering. The pattern is undeniable. Every single major Bitcoin move has been preceded by a DXY move in the opposite direction. So why does this relationship exist so consistently? 2 reasons. First, global liquidity. When the dollar is weak, money flows out of dollar assets and into risk assets. Stocks, commodities, crypto. More money chasing Bitcoin means higher prices. Second, investor psychology. A strong dollar signals tight financial conditions. Rising rates, expensive borrowing, risk off. Investors sell risky assets like Bitcoin and move into safer dollar-denominated assets. A weak dollar signals the opposite. Easy money, low rates, risk on. Capital flows into everything, including Bitcoin. It's not complicated, it's just macro. So what is the DXY telling us right now? As of May 2025, the dollar has been weakening. The DXY has pulled back from its highs above 110 toward the 100 to 101 zone. This is a significant move. Historically, a DXY dropping toward 100 and below has been one of the strongest tailwinds for Bitcoin price appreciation. Combined with the April 2024 halving, which we covered in our last video, we are sitting in what macro analysis suggests is one of the most favorable setups for Bitcoin in years. That doesn't mean prices go up in a straight line. Markets never move in straight lines. But the macro conditions, dollar weakening, post-halving supply shock, are aligning in Bitcoin's favor. To summarize, the DXY is the single most important macro indicator for Bitcoin traders and investors. When the dollar weakens, Bitcoin historically rises. When the dollar strengthens, Bitcoin historically falls. Understanding this one relationship puts you ahead of 90% of retail crypto investors who only look at crypto charts. On this channel, every week, I track DXY, Bitcoin, and gold together, so you always know where macro is heading before the crowd does. If that's the kind of analysis you want, subscribe. And if you missed our last video on Bitcoin halving cycles, watch it next. The two topics connect directly. See you next week.